Big data is one of the main IT-related challenges of this decade. It is also one of the greatest opportunities the investment sector has seen for very long. Financial markets themselves are changing. They have been globalized for many years, but there are many products appearing from robo-advisor to specific financial products like ETF, who are cheaper and who do not represent active trading. How to use big data and artificial intelligence to gain an edge in financial markets? Our answer in terms of artificial intelligence is analyzing emotions. We feel that there's really a need to understand consumers, traders, asset managers, both the global population in a country and specific groups that make market prices in order to make sense of this information. So the goal of these technologies is actually to automatically extract information related to financial markets in order, one way or another, to generate alpha, to generate financial performance. At the end of the day, we create innovating trading indicators that are generating performance, that are decorrelated, and that are entirely automated. This is really our core product. I actually have a great announcement to make today. We're launching a new product at SESAMm, and I really want to show you a few screenshots. And Lumière de Marché is a much simpler way of seeing our products. It's really for discretionary trading. You can use simple emotions in order for your decision process to make more sense. So it's about trading-specific social media data. There are emotion for more than 10,000 instruments in the financial markets. And there are customs analytics and portfolio, which means you can create your own portfolio. The goal of these technologies is actually to automatically extract information related to financial markets in order, one way or another, to generate alpha, to generate financial performance. I talked about big data and artificial intelligence. I didn't speak at all about trading, which is a problem. And we have our partners here, our main partners that are based in London, Quant. We want to show you what happens next when we provide our indicators, what happens in terms of trading, of portfolio management, etc. So please welcome Julien, TROMBINI, and Guillaume CAZENAVE.
I'm Julien TROMBINI. I'm the CIO and founder of Quant. We are based in London and specialize in algorithmic trading. This is what we do on a daily basis. Big data is well known in the trading world. But the way we use it, thanks to SESAMm nowadays, brings alpha in a very different way. That's the key. We do systematic trading. We have that expertise. But now we mix our technology with SESAMm technology to get a product that is diversified enough and is fully automated. So we backed the strategy and we developed it step by step. We started with 100K, now we're at 2.2 million. So which means that not only we were believers in the technology, but also means that it worked. So we're happy to show a curve that goes up. We are providing consistent results, and we are outperforming most of the benchmark. The way we managed to do that is having an indicator that is not based on price. And that's the key, really, which means the whole signal is not based on price, which is the complete opposite. No one in the industry does it.
Thank you, Julien. My name is Guillaume CAZENAVE, co-founder of TRC. And basically, I will give you some feedback of the marketing we've done. What we found from our marketing campaign, that's where SESAMm brings something interesting or new. But basically, the lack of performance in the hedge fund industry has been a factor to challenge the old 220 fee structure. Investors are not anymore willing to pay 220 for hedge fund. It's been proven that hedge funds are not delivering such good results. The hedge fund asset class used to be a return enhancer, and now it's moving to a more risk diversifier. And if we look inside the alternative investment, you go down to hedge fund, then you go down to CTA, which is the asset class has been raising assets this year. CTA are mainly trend following. That's not that far from what we're doing because we try to forecast the trend of the market based on the sentiment. There is clearly a need from investors to find a way to generate alpha. But basically, a lot of people in the industry believe that alpha is a zero-sum game, and more and more people want to be part of this game, but only a few can provide performance. And as a matter of fact, we had extremely positive feedback from our proposal from clients during our campaign in spring. Why? Because the technology we were providing is something new, and as well the results are there. Obviously, at this stage, we needed some strong backup, and we have started exclusivity talks with a tier 1 hedge fund, which is ready to back us and to back, obviously, SESAMm on this, and we are very, very excited about that. Obviously, there are challenges. We need to keep the performance, and we are working actually on diversification and capacity. That's it for me.
And our next speaker is Erick Brethenoux from IBM, so please applaud him.
How do we help people do new activities, help them also augment a little bit of their dimensions in terms of knowledge on how we apply that technology to other problems? We're trying to get more out of what we have in terms of data, and as Sylvain mentioned before, there's a ton of that out there, and we're trying to get most of what we can out of that data. One stat which Citibank gave me last year, and I thought was absolutely amazing to me, is the fact that they are getting a lot of information out of all the credit cards that they are processing on a daily basis, and when they told me that how much of it really they were taking advantage of, it floored me. I could not believe that only 0.5% is what we're looking at. And there's no legal restriction for them to get that low in terms of utilization. In Europe, it may be more explainable than in the US or in Asia, because we have more restrictions in terms of privacy of data, but it's not in the US, a lot less at least. So that number is uncharacteristically low. There's an issue with that. It's very little that we take advantage of. And it's true for most of the clients we are working with. They are not taking advantage of that information. So we do realize there's something wrong with the old system. But what I'm seeing as a trend today is not a competition, much less than you would think. The fintechs and the traditional technology companies and the banks are actually cooperating a lot more than they are competing. Not to mention the fact that the old ones realize they cannot really compete with the new ones, so they buy them up. And then they have a hard time to integrating them because the culture is very different. So we can all kind of dynamics like this, but it's not really a confront and a frontal problem and competition. It's much more of a cooperation. What we are realizing in terms of emotions and how to take advantage of all the information we have about people, we didn't start with the financial sector. We started with retail and some of the other sectors as well. It's all about understanding the customer. The way we do that is by doing three things, is maximizing the context. Sylvain talked about that. It's very, very important for us, because I'm not Erick in the morning getting his Starbucks at 7 a.m. on Monday. It's not the same Erick at 7 p.m. after 12 hours of meeting. Not the same on Sunday morning when I get to Starbucks, I finally get a day off, and I may want a pastry with that, please. So that person is very different depending on the context, and what we do with that information is absolutely critical to minimize the uncertainty of the recommendation we make. It works for the financial market in exactly the same way, and also on optimizing engagement. So we use a lot of information and technologies in the meantime to be able to do that. We have called them different names. I mean, I studied artificial intelligence, but then we started to use some of the techniques for data mining, and it became predictive analytics. We're back to machine learning now, but it's basically the same algorithms or very similar. And at the same time, most of that is becoming more and more useful and embedded into applications. And this is what's very important, actually. We're not just talking about it, we're actually using it now. So when you start moving forward on some of this, you realize that that emotion that Sylvain talked about plays a big role. We work with a company called Xio Design. Xio Design does games analysis. They don't analyze the games, they analyze the gamers. They have a camera on top of the screen looking at how people react when they play the game. And then they look at that and they decompose fun. They decompose and deconstruct fun. What does it mean, that game to be fun? And look at the emotion generated by the game. Never are we so emotional as humans when we play against computers. So they really decompose that in four areas. One was hard fun, the winning, the crushing, the destroying the opponent kind of thing. Those generate very particular sentiment, and we looked at the variables that actually linked toward generating that kind of sentiment. The second one was easy fun. The easy fun is more about curiosity, exploration, strange worlds, things like that. So it's much more relaxing, but very enclosed curiosity, being able to exploration as well, jumping on things we don't necessarily know about but want to explore. The third one was serious fun. It's about real life situation where you put people in different ways to be able to explore what might happen. So most of what they're doing that actually is about zen and calm in trying to predict something that might happen. And finally, the people fun. There are games where you have fun only when you play with others. So we use that to be able to understand where are the variables that will allow us to know in which mental state the customer, the consumer, the patient, the student, the passenger, the citizen might be at that moment in time to offer them the best recommendation we can depending on their function or the system we are working with. The problem for us in the last 5 years has not been about big data. The problem for us is the speed. Dealing with a piece of information and taking advantage of it, like Sylvain said, in like few milliseconds, that's where the challenge lies. In trading, the fast data piece happens in different ways. When Hillary treated that, you've seen the news scandals recently in the US, as soon as she said that, and it was actually about like 10 a.m. in the morning, as soon as we saw that by 1:10 p.m., look at what the stock did that day. So fast data is becoming one of our biggest issues. It is our biggest challenge. We're dealing with it, not always very successfully, because we have a challenge to be able to do that. It's a lot of data, a lot of time that we have to process very quickly, but it's getting there. That's the way the challenge for us lies. So speed is of the essence, and Sylvain went through that already. And with that, I'd like to thank you very much for inviting us today. It was very kind of you, and I really appreciate your attention. It was a very pleasure to be with you today.